Welcome to Markets Now. I'm Michelle Rook with Mike Miner, Professional Ag Marketing, and it was a higher day in the livestock futures, but a mostly lower day in the grains. So, Mike, let's talk about the grain trade. First of all, corn, soybeans. Do you think we're starting to see a little early harvest pressure there?
I do. The soybean pressure, especially, I think we're starting to see early signs of harvest pressure. On this most recent rally that we've had, we were able to get rid of short contracts and managed money, and we didn't have a lot of sell pressure against it. Prices were somewhat low, so farmer selling was pretty minimal. And especially for the fact that we were in old crop years still, not a lot of new crop, so there wasn't much farmer grain to really counteract that short covering. So we've put together a good rally, and now here real recently we're seeing a lot of harvest pace pick up in the eastern corn belt, especially with the dry weather really wrapping up the growing season quickly. Yeah, and we're starting to see some of that get applied here, Michelle, at this time. And I also think Brazil, they've got a little bit wetter forecast for the first part of October, so that probably got factored into some of today as well.
Yeah, absolutely. Because that's kind of their key time where they are going to be planting, right?
Yeah, September, October is kind of a wider window that they've got, so they can delay planning a little bit, like in Argentina. There's been some word about that with the dryness, so they're pretty comfortable, I think, to wait until we're into October a little bit to start planning down there. No real concerns from that perspective yet.
Right. And speaking of weather, looked like maybe the wheat market has been reacting to a little bit better moisture in central and southern plains winter wheat areas.
Yeah, northern Oklahoma, looks like we're going to get some rainfall there as well. That's going to help that area out immensely. So a little bit of a pullback here after we've had a really nice rally, really nice recovery through most of these grains, corn, soybeans, and wheat. So just a little bit of a setback, I think, in the wheat, kind of leading the way lower out of the three grains, which they kind of led the way up too. So we'll see what happens.
Yeah, but really, wheat, all of these markets ran up into some pretty good chart resistance, especially if you look at like Chicago wheat, $6 right under that level just stopped us cold, didn't it?
Yes, it did. Yep, pretty strong resistance levels. And I think corn and soybeans, you probably have some stronger ones that are just ahead. Corn, that old high around like 423. I think that area right there could be a nice resistance level by that point. If you go up, really test it, and then we pull back and have a poor close, that could really test these traders, I think, going into harvest.
What are you watching in terms of soybeans? Because there's been a lot of discussion in the November beans that we've hit our head around that 50-day moving average. We get above it, but we can't close above it. What are you watching? Is that the level or not?
Yeah, that 1031 area on the November soybeans was that most recent high we've had. Difficulties getting above that, and then from a just a psychological perspective as well. If you've got a 40-cent basis, I mean, you get close to $10.50. There's a lot of $10 cash soybeans sold, especially this year. High interest rates, bigger crops. We're going to see a lot of soybeans move early on in this marketing season. So I think if you get around that level, there's going to be incredible farmer selling to try to keep those fund traders at bay, and we could really see some massive short covering on that time frame without really getting to see or feel much of it.
Yeah. And I got to ask you, Mike, the funds have covered a big portion of that record short that they had in all of the grains here. Now that we are starting to see monetary policy ease, do you see maybe them coming out of more of those shorts?
Yeah, so when you look back towards August 27th, that report that came out that Friday on September 2nd, we've covered about 110,000 contracts on corn since that time frame, and we pretty much ran up about 25 cents from those 385 December lows. So we covered 100,000 contracts and managed money, and we recovered 25 cents. I think if you were even recovered another 110,000 contracts on corn, there should be an incredibly larger farmer selling to counteract that. So my expectations for a fall or harvest rally here is pretty minimal from this point on. I think if you go test some of those, that 423 area on corn or 1030 on soybeans here, yeah, I think that could stop this market pretty hard in its tracks at that point. And now the news we got yesterday with the Fed, that at this point is only going to fuel commodities in a better way for demand. I think it leaves us better fundamentally going forward. It should lift all tides, lifts tide lifts all boats. I think that's going to be true for the commodities going forward, and they probably have already been seeing that over the last couple weeks. They're expecting this rate cut for quite some time now, so that's something to watch as well. But I think yesterday was good news for equities and commodities altogether. I think that's going to default to a win for both of them. If you go back to when we first started raising interest rates, that was basically the start of this bear cycle that we've had over the last 4 years or so. Now we'll see what happens as we start to cut rates. Is this going to be bullish for these commodities and these indexes alike or not? Because there has been a lot more talk, Michelle, about the spread between where equities are and where commodities are is getting pretty great compared to where we were in the last 5 years or so.
Yeah, you wonder when that is going to be unwound there, because I know there's a lot of money that's being piled into the stock market. We had new highs again here today or close to it. So is that part of the reason cattle and hogs were higher today, the meat sector like that, or was that again a delayed reaction to the interest rate cut?
Yeah, delayed reaction to the interest rate cut. I think cattle have another story going on as well. Like I mentioned, they didn't really get to trade that news yesterday, and the bulk of it got traded today. But so from a demand perspective, great news. It should keep rolling on that perspective, which has been pretty good anyways. We're pretty flat on choice, at least. Maybe not enough ground hamburger out there at this point. But when I look at the cattle market, we had continually, it was like $1 to $3 lower every single week, it seemed like, in the cash market. Now
True.
this week and last week we were what, $4 higher week over week in the cash market. We finally made that reversal where we started making cash go up after quite some time, and now it looks pretty steady to maybe a little bit higher than last week, with the futures getting a little pop this week as well. So looking forward to what Friday brings for cash here, but I also think that it probably won't be too bad a news for us going into this weekend, Michelle.
No, I totally agree. The bottoming of that cash market is what the futures have been waiting for. Okay, so you've got December live cattle now above the 180 mark psychologically anyways, and new highs for the move today. So where do we project to now, do you
You
think?
know, that 179.5 was a pretty strong resistance level. If we
True.
close or trade above that, we should find some more technical buying, and maybe that triggered today as well. Because like yesterday, we pretty much closed right on that line, or we advanced just enough above it that said, okay, given some other factors, you can probably hit the green light on the technicals today on Thursday. And cash is a little bit stronger too last week, so they kind of got the green light to get some buying done, I think, going into the end of this week.
So that 179.50, Mike, that was kind of where the uptrend line was, or the downtrend line was taken out. Is that right?
Yep, that was our resistance level. A
Okay.
close or advance above that, I thought, was a technical bullish action.
Yeah, a lot of people were talking about that. All right, the hog market. What's your thought there? Has this move all been technical, or is this just demand being better than we thought?
Well, index funds are still incredibly long. They've almost got a record long position here currently. We have been putting a lot of spec money, managed money into those as well. We've gathered from, just barely sub negative of a managed money position to about 37,000 now, which for the hog market is quite substantial, I guess. It's about half of what a record would be. So they've been putting on those. I think most of the recent rally was probably a basis correction up front. So that'd be part of it. And then just this idea that, demand's been pretty good as well for the hogs. So exports have been decent. Domestic demand has been decent. Yeah, it's not so much of a supply side story, probably, is just this idea that we didn't have demand really spike into the summer and have cutout really spike, and then it normally is followed by a sell-off at this time of the year, and we haven't seen that yet. Normally by now you would have seen it. So if we can continue to hold cutout in the mid 90s, that's a very strong signal for demand, I think it's a good sign. And I think that's what we're kind of focused on here recently. But we've had really strong index fund buying. We've had really strong management money fund buying. And then now upfront, we had a basis correction that came into play recently. Other than that, expectations probably could be pretty limited here going forward. For you're going to start hitting some key resistance levels with December around 74, as that psychological level's been difficult to really break through those old highs as well. And then in the summer, you start to get those summers from the low 90s into the high 90s. That $100 level is just a psychologically tough level. And then you start to hit a lot of marks too for margins at that point. So I think it could be tough to advance past that next little wave up, but we'll see what kind of resilience this hog market has for holding these levels at a time of the year that it normally doesn't.
Yeah, hopefully these are hedge opportunities too for producers. All right, thanks, Mike. Mike Miner with Professional Ag Marketing. Markets Now.